Banks and international financial institutions have a complicated role in the global economy, because on one hand, they are the pillars of the legitimate financial system. But on the other hand, they are sometimes used negligently or worse, even deliberately, to move and hide profits from organized crimes such as drug trafficking, human trafficking, corruption, and other illegal activities. There is no shortage of studies and reports indicating that between 2% and 5% of the world's GDP, or something between $800 billion to $2 trillion, is laundered annually, fueling the continuation of organized crime around the globe. The United Nations Office on Drugs and Crime, or UNODC, estimated, for example, that the global drug trade generates around $320 billion per year, while human trafficking, in theory, would account for about 30% of that. These large amounts need to enter the formal financial system so that criminals can enjoy the profits without raising suspicion, and this process is what we know as money laundering. Reports from organizations like Global Witness make it clear that crimes such as drug trafficking, corruption, and money laundering would not be possible on the same scale without the existence of so-called respectable banks that hide the origin of dirty money, giving the appearance of legitimacy to illicit funds, or, in other words, the success of transnational organized crime depends crucially on the ability to mix illegal profits into the formal financial system, whether through bank deposits, shell companies, or investments in legitimate assets. In recent decades, countless cases have come to light revealing systemic failures, and in some cases the complicity of global banks in moving criminal funds. The global market for organized crime is immense and extremely diverse. The numbers I mentioned a little while ago are from before the pandemic and most likely got worse after the pandemic, after the war in Ukraine, and more recently with Trump's tariffs. Supposedly, drug trafficking remains the most profitable activity, followed by crimes like human trafficking, smuggling, arms trafficking, environmental crimes, and fraud. A large part of these profits fuels illicit financial flows that cross borders. These numbers make it clear why financial institutions are preferred targets for criminals to, let's say, launder this dirty money. In the world of crime, dangerous and respected criminals are the bank robbers. But in the real world, the biggest and most influential criminals are those who associate themselves with banks. And that's because they're not even at the top of the chain. These banks offer a facade of legitimacy. Once the illicit funds enter the bank, they can be converted into theoretically legitimate balances through deposits, transfers, investments, and other services. Studies indicate that most of the profits from drug trafficking end up integrated into the formal economy, often through banks. Money laundering usually goes through three phases: placement, layering, and integration. And banks are mainly present in the placement stage, and integration, receiving large sums in deposits and then allowing their withdrawal as if they were clean funds. Despite anti-money laundering regulations from governments and private associations and audit obligations, there are countless cases involving banks, which, in the most charitable sense of the word, that would have merely failed to detect, or worse, chose to ignore signs of criminal money circulating in their accounts. And I'm being generous because it's probably much worse. Academic and government reports document incidents of financial institutions moving billions without properly verifying the source, facilitating the concealment of assets from political corruption, drug trafficking, and other crimes. In many scandals, the fines imposed, although in the millions, are a small fraction, a pathetic fraction, of the bank's profits, leading to criticism that some of these penalties are simply absorbed as the cost of doing business without having any real deterrent effect. In the 1970s and 1990s, BCCI, Bank of Credit, and Commerce International was involved in widespread global money laundering for traffickers like Pablo Escobar, dictators, and other criminals, with secret operations in tax havens and misuse of correspondent banks. Entre 2004 e 2007, Wachovia Bank allowed more than $370 billion to enter from Mexican currency exchange houses linked to drug cartels, such as the Sinaloa cartel, systematically ignoring warning signs that had been given to them. Between 2000 and 2010, HSBC ignored transactions, even with warnings from law enforcement agencies, that allowed the laundering of at least $881 million. Money from drug cartels, from its branch in Mexico. They also moved funds for sanctioned regimes and clients linked to terrorism, due to extremely lax compliance procedures, probably intentionally lax. Between 2007 and 2015, Danske Bank operated as a large-scale laundering channel, processing about $230 billion in suspicious transactions from non-resident clients, mainly from Russia and the former Soviet Union. Bank employees helped clients hide the origin and real beneficiaries of the funds using shell companies, while the headquarters turned a blind eye to these control deficiencies. Germany's Deutsche Bank, between 2010 and 2019, transferred hundreds of millions of dollars for oligarchs and fraudsters, even after being repeatedly fined for allowing this. For example, by helping move suspicious amounts, a convicted Ukrainian oligarch accused of fraud was assisted, and the bank continued serving extremely high-risk clients. Like the financier Jeffrey Epstein, the one who was convicted of sex trafficking and child abuse, even though the bank was already aware of his history. And it also conspired to conceal bribe payments to public officials in countries like Saudi Arabia and China, disguised as consulting expenses. Goldman Sachs from the United States in 2012 admitted it was involved in the corruption scandal of Malaysia's sovereign wealth fund when the bank arranged $6.5 billion in bond issuances for 1MDB, an insolvent strategic development company in Malaysia fully owned by the Minister of Finance, of which about $4.5 billion was embezzled in a bribery scheme involving Malaysian officials. Partners at Goldman Sachs helped forge documents and bribe officials to close the deals. A former director even publicly admitted to paying $1.6 billion in bribes to politicians and intermediaries. Goldman made about $600 million in fees from the deals while the scheme was running. In Brazil, Odebrecht between 2001 and 2016 maintained a structured operations department dedicated solely to paying bribes to politicians and public officials. In at least 2 cases, it hid payments outside of the official accounting. During that period, it distributed around $780 million in bribes in exchange for public works and service contracts. To make the illegal transfers possible, Odebrecht created a complex network of offshore companies, that is, accounts in tax havens and secret accounts abroad. It even went so far as to acquire control of a private bank in Antigua, Man Bank, in order to, together with complicit executives, Odebrecht concealed payments from these funds. It passed through banks in the United States, Switzerland, Andorra, and other financial centers known as money laundering hubs. In all these cases, we see a recurring pattern: global banks acting as laundromats for illicit money, either on purpose or through gross negligence at best, with private profits contrasting with losses for society. Even when discovered, the institutions often avoid direct criminal charges by reaching financial settlements. In other words, they end up just paying a fine. For example, in the case of Wachovia, the authorities pointed out that the fine imposed represented only 0.2% of the bank's annual profit, and the criminal action against them didn't even affect the price of their shares, which actually went up during the week of the settlement. This suggests that financially it was worth it for the bank to have absorbed billions of dollars from cartels. The revenues generated over the years far exceeded the penalties imposed. At HSBC, the situation was the same. During the years when its compliance department ignored warnings about drug money from Mexico, the then CEO, Lord Stephen Green, even received performance bonuses of around £20 million. In other words, the executives were rewarded for inflated financial results, partly from illicit activities they knew were illegal, and none of them had to return those bonuses even after the scandal was exposed. This illustrates how high-ranking bankers can, in practice, become indirect beneficiaries of organized crime by receiving compensation and promotions based on profits tainted by dirty money. Several investigative documents indicate that some banks chose not to question the influx of illicit capital because it was a lucrative source of revenue. It's a convenient tactic. I won't ask if you don't say anything, so I'm not to blame. The United States Senate report on HSBC described an institutional culture that prioritized profits over legality, calling it a contaminated culture due to its disregard for anti-money laundering controls. In the case of Danske Bank, American prosecutors concluded that the headquarters deliberately kept accounts of extremely high-risk clients, many linked to the Russian mafia, at the Estonia branch because that unit generated huge profits. In other words, management chose not to kill their golden goose despite internal warnings, allowing billions of suspicious dollars to keep flowing and generating commissions. This perverse logic led to fines and legal threats until recently, not being enough to deter banks from reoffending. A global investigation known as the FinCEN files from 2020 revealed that several major banks, even after being fined and making deals with authorities, continued moving astronomical sums of dirty money for oligarchs, fraudsters, and corrupt regimes. Classified documents from the United States government showed that JP Morgan, HSBC, Standard Chartered, Deutsche Bank, and Bank of New York were the cause of criminal charges, despite promising to improve their practices. In certain cases, these banks were explicitly warned that they could face criminal charges if they did not cut ties with mobsters or corrupt individuals, but even so, they continued serving these clients. JP Morgan, for example, after 2011 and 2014 made settlements for compliance failures, being caught transferring more than $1 billion to Joe Low, a fugitive responsible for the 1MDB heist in Malaysia, and tens of millions to others involved in scandals in Venezuela and Ukraine. The profit from these transactions through fees, investments, and business expansions apparently outweighed the fear of further sanctions. Another important angle is the use of tax havens, offshore banks, and banking secrecy. Banks located in jurisdictions with low regulation and high authority and secrecy are key tools for organized crime. The historical case of BCCI that I mentioned at the beginning of the video in the 1980s was one of the most emblematic, serving as an example of how an entire bank can be structured as a vehicle for organized crime on purpose. It operated in several countries without effective supervision and offered tailor-made services to hide money from smuggling cartels and even terrorist networks until it was shut down. So, offshore financial centers and legal loopholes continue to be exploited. It should be noted that it's not just large mainstream banks, so to speak, that profit from crime, but also smaller institutions or new financial technologies. For example, the purchase of banks by criminals has become a common tactic nowadays. Executives from Aldebrecht literally bought 51% of a bank in Antigua just to use it exclusively to launder bribes. Similarly, investigations in the United States revealed that a Venezuelan businessman acquired a bank in the Dominican Republic to launder bribes and illicit gains from corruption involving PDVSA, Venezuela's state oil company. A critical aspect is this active or passive involvement of bankers and top executives in these schemes. Often, the institutions blame control failures or some low-level employees. But investigations have shown that high-level decision-makers were well aware of the risks and, in some cases, actively participated in the frauds. In the 1MDB scandal in Malaysia, a Goldman Sachs partner and director, Tim Lesner, admitted to conspiring to launder money and pay bribes, falsifying internal records to conceal illicit payments to intermediaries. Another director, Roger Eng, was convicted for facilitating the transactions knowing they were the result of corruption. These cases are notable because they break the trend of individual impunity. Both face serious criminal proceedings and prison sentences, but they are the exception. In most scandals, no top executive was personally charged criminally. The institutions negotiated settlements and paid fines.
And at most, some managers resigned or were fired.
In terms of structure, sometimes bankers literally get paid. Bank manager Stephen Reyna from a bank in Texas in the United States used his position to launder $410 million for a Mexican drug cartel, organizing structured deposits and cash withdrawals for cartel members, receiving a cash commission himself for each successful operation. And more recently, another investigation in Brazil discovered that a civil police officer became a partner in a financial institution. It was a fintech, and he used it to process millions of reais for the PCC. These cases reveal direct collusion. Without the internal help of corrupt managers, board members, or directors, laundering would be much more difficult. And why is it so hard to mess with the banks? And you probably think you have the answer because they are rich. But I'm sorry, you're wrong. The answer isn't as simple as the traditional "they have money." Get one thing into your head: money is not power. That's a myth. Money needs to be converted into power, which requires a certain skill that many rich people don't even have. And the difficulties of taking on banks are 7. The first is that banks are part of the global structural and geoeconomic power. Banks are not just financial intermediaries. According to the 2022 study by Mezok, many governments consider their banks to be more than just tools of economic policy. They are pillars of geoeconomic power. The strength of these institutions in global markets is seen as an extension of state sovereignty itself. The second is the so-called too big to fail, which means that financial institutions considered systemic, seen as a structural part of the global system, have implicit advantages. The state needs to prevent their bankruptcy to protect the financial system itself. This creates a lower funding costs since investors perceive less risk. The third is the lender of last resort function, where during crises central banks act as the ultimate providers of liquidity. This action prevents bank runs and the collapse of the financial system. This security reinforces the state as the guardian of the private banking system itself. The fourth is that banks serve as intermediaries for geopolitical shocks. This is very important. Global banks are channels through which geopolitical shocks spill over into the domestic economy. Research from the Federal Reserve Bank shows that these banks, through cross-border operations with branches and subsidiaries, transmit instability or help to dampen instability across markets. The fifth is solvency and geopolitical risk. The European Central Bank highlighted in 2025 that geopolitical crises worsen bank solvency. Shocks such as wars or trade tensions increase inflation. They reduce economic activity and have a direct impact on banks' capital and liquidity. That's why regulators recommend macroprudential buffers, meaning banks own money to contain these risks without exposing governments to greater risk. The sixth point is that transnational banking coordination institutions facilitate cooperation between central banks, contributing to financial stability and global trade. And finally, the seventh, it's regional coordination in crises, such as the Vienna Initiative in 2008 as an example, because the financial sector has become an instrument of geopolitics. As I always say, and a lot of people really don't understand, the state is the driving force of geopolitics. Banks are just instruments. The Vienna Initiative was an agreement launched in 2009 at the height of the global financial crisis to prevent Western banks from suddenly abandoning the countries of Central and Eastern Europe. That would have caused economic chaos. International banks, local authorities, the EFME, the European Commission, and the European Central Bank made a public commitment to maintain their presence and not abruptly cut credit lines. In return, governments and international institutions offered financial support and regulatory coordination through the banks. The initiative preserved the region's financial stability at a critical moment. This showed how banks are treated as geopolitical tools. But again, they are the tool. They are the car, not the driver. Well guys, I hope you enjoyed today's video. You saw that this banking issue is complicated and it's just the tip of the iceberg. You've already seen it in another video here on the channel. If you follow the channel, the issue of BlackRock and Vanguard getting more deeply involved
administração dos sistemas bancários
with companies and governments, so there's something big coming. And how are you going to find out about it? By following the World Geopolitics channel. There's no other channel that brings this level of detail about what's happening in geopolitics, both on the surface and underneath, in the hidden underground side of things. There isn't, right? It's no wonder that you often bring me other channels that end up copying the World Geopolitics channel. It's a tiny, minuscule channel, but it's an innovative one. And I'm able to be innovative. You know why? Thanks to the members. So consider becoming a member, because the World Geopolitics channel has this creative freedom, this academic freedom. where I can do research with more time, with better organization, with a higher level of detail, because I don't have to worry about doing things just for the hype. I don't need to go around desperately giving my opinion on everything. As soon as something happens, I can investigate it in more detail and more deeply. Since more than 90% of the channel's revenue comes from members, it's very different from the vast majority of channels that earn from views. That's actually a good thing, because again, it gives this creative and academic freedom, thanks to the members, so consider becoming a member. It really helps the channel. And it ensures that it stays alive, always bringing this kind of in-depth and innovative content to you. Thank you all, I hope you enjoyed it, and see you in the next video.